Okay, guys, welcome back to Basics, where we take my beautiful fiance Jessica and we teach her to trade while we try not to kill each other being locked up in quarantine. That should be the full title. I should change that. So that's the. Anyway, this is episode 13. If you guys are new here, there's a playlist on both of our channels where you can go back and watch from the beginning, which is what is a stock, all the way to where we are now. And we're going to keep going. Technical, statistical analysis. Jess will be programming Holly's neural networks soon and genetic algorithms. And
Yeah.
Good. Take that away from me. It's all boring stuff. And I'd like to thank Rudy from Trade Ideas. There's an obvious reason why our thumbnails and graphics got way better and has nothing to do with either of us. He's done a very good job on both of these. So here are our socials. Again, if you're watching this on my channel, know that Jessica's has the next week's. She's got one in advance, so you get a sneak preview there. And go follow both of us and say hi. You'll just probably end up seeing a lot of pictures of our dogs on kind of both sides there. So last time, we technically took last week and just showed you Trade Ideas. We set you up with a little account that you've got in the cloud. You can play around and make some trades. And just to give you time, when it comes to a new software or whatever, there's just a certain amount of time you've got to spend pushing buttons in order to learn. I think you took your first trade.
I did.
On Lululemon. You were right, but you were just early because I think it's even down bigger today.
I know.
You're going to get that a lot. Just get ready. It's going to happen a lot. So, but before that, we were talking about trends. And I just kind of put this here to show that what we're going to be talking about going forward, this geometric pattern is probably going to be like a 3 or 4 part series. But they're all based on support and resistance and trends. So everything we do going forward is based on support and resistance and trends until we get off the technical bandwagon, which will be most of this because really it's all that matters. Right? So we're going to talk about these technical patterns, and they're basically geometric patterns. So there's all kinds of funny names. This one's just going to be kind of just to get your feet wet with them, and then we're going to go through all the individual patterns next time. But just know that it's not the magic of the pattern that we care about. It's what does it represent with the psychology between the buyers and the sellers. Okay. Remember when we did candlesticks, and it was the same thing. I said, here's a doji, but it's not that there's any magic in that, but what does it represent about that about? This will be the same thing. And there's no magic. I'm going to show some examples of how some of these patterns worked and cool things that they did, but I just want to know that there's nothing magical about any of this. It's to weight that coin. If you got a 50-50 chance, we're hoping that we can give you a 55 to 60% chance. And the rest is knowing where you're wrong to get out quickly, and then if you're right, you can get really good moves out of them. So back to trends, right? The initial higher high and higher low. So now how you would draw a trend line on both of these, right? How do you draw a trend line on something that's uptrending?
On the troughs.
Right. And then downtrending, it's on the peaks, right? So that's kind of the basics of the formation of all of these patterns. All of these patterns look at the peaks and they look at the troughs, but everything that we've looked at so far, we've kind of shown as a straight line. The stock's just going up or down, but it could go up a bit and then it could go down a bit and it could go, right? All kinds of different ways, and there's different patterns based off kind of the psychology behind it. So the first one we're going to go through here is channels. And this is just kind of the most basic one because it's taking a trend and it's just dealing with the other side of the trend. So here are your 3 types of channels, which probably make a lot of sense for your 3 types of trends that you've realized. Right? A bullish, bearish, and a horizontal or sideways trend. Essentially, what this is looking at is it's saying, okay, well, not only am I going to focus on buying the troughs, but if I can draw another parallel line, and for channels it will always be a parallel line,
Okay.
above on the troughs, you could see how this addition could already make you more money than before. So before we said, oh, well, if you get, 2 points, you could draw a line. You could say, okay, I'll buy on the third point. And then you could buy and maybe hold until the trend was broken. But what if you were to buy on this third point, and when you hit the upper, sell,
Got it.
right? It comes back down, you wait, you buy again, and you sell. So, right, this is a little bit more active trading, and you can see how small of a jump it was from a trend to a trend channel, and how many more combinations of trading that this gives you. But that's one way to do it. But the other way that a lot of people will actually trade these channels is they will wait for the channel to break. So we'll go over this more, but this comes into pennant patterns and bull and bear flags and stuff that we'll talk about again. But just think about this as if this was price action. If the stock fell, right, bad news happened, and then it traded in this channel for a while. You could either trade the channel, or you could say, okay, as long as this channel exists, it's just showing that this battle, the bull bear battle, is going on. And you could set an alert, and you could say, I just want you to let me know when it's made its way outside of the channel. Okay, the very common trading style is you just take it as it breaks out of the channel, put your stop a little bit above it, and that's how it enters a new trade. And this wouldn't look like a straight line in the real world, and I have some real world examples, but it would look, you could draw a trend line on this as well. There are people out there, and that is all they do with their trading, is they just find a move and they find these channels, and then they wait for a move out. It's a patient style of trading, but there's definitely a lot to be said for it. So again, you could see the two kinds of trading that could exist within this. Now, this is a real chart. This is US dollars versus Japanese yen, but again, it doesn't matter, right? Technical analysis works in all markets, where you can take these first 2 points and you could extrapolate those out, drawing this line. And then you can see if you take that same line and just copy it so that it's parallel and move it up, you can see that it worked pretty good as resistance. So after the first 2 points that you need to draw a line, or even this point at the bottom and this point up here, you could say, okay, I'm going to draw the line based off of that. And every time it started to push off of that line, if you bought it and then sold it when it got to the top, you can see that you would have made 3 or 4 good trades until one time you did it and it didn't work. So you either, which is great, if you can do 3 good trades and 1 bad trade, that's a great trading plan. But you could see that you could actually then flip that and say, okay, now this channel's broken. This stock is technically still in a downtrend because you can see that it's moved lower. And even after all this action, it still hasn't got up as high as it was over here. So it's still technically that lower high and lower low that we talked about in a downtrend. So you could take the break of that as a continuation of this initial trend. And then you can see quite often what happens in some of these situations, right?
Wait, go back to the last slide there.
Yep.
You said that's still a downtrend?
Again, so relative, yes. If you were to take this chart and zoom it out, because you see it came here and made a low, then it made a lower high, and then it made a lower low. So technically, until it breaks this high right here, it's a downtrend.
Okay.
So even though it took a very long time to do it, it didn't quite break this, and then it turned lower.
Okay.
Right? Because remember, the definition of a trend is always lower high and lower low. Now, if you zoom in and you're just looking at these actions surrounded by these bars here,
right,
then it's an uptrend. And that comes down to all of like the relativity in trading, right? Because within each of those bars, each of these bars I think is 4 hours, but say they're daily charts, right? In each of these bars, this day had a downtrend, and this day had an uptrend, and this day had a downtrend. So it's really all about your perspective. And that's something we'll talk a little bit more down the road, but that is a really good point. Depends on how you zoom. If you zoom out far enough, everything's an uptrend, right? The market's always in an up. It's just, what is your trading time horizon, right? For me, it's a couple days to a couple weeks. You, it may be less, it may be months, who knows. Yeah, so it's all about, so you're going to stick on your time frame, and then you're going to say, in my time frame it's on an uptrend, or in my time frame it's in a downtrend.
Okay.
And then here's another example from, again, all the charts that I found were all Forex related, but again, this could be anything. But you draw your trend line from point 1 and point 2, and then you've got your trend line. So say you bought here at point 3.
What is point 1 and point 2?
These down here.
Right.
So you need 2 points to draw a trend line, right? And then what he did is he connected this low point with this area here, and he drew a trend line out, and then everything else fell inside of that trend line.
Okay.
And then same with on the top, right?
So he's connected the wick there then, right? That's where he started his trend, or whoever started their trend line?
Correct.
Okay.
And it's to each their own. Some say include the wick, some say don't. Some say include the wick if it's a major low. Like you can see how this was a major low before price turned, but this wasn't a major low.
Okay.
You'll find your own style. There's no, right? This is the art behind it. And when I say art, I literally mean there's people out there who take well, you've seen me do it with my iPad too. You take a pen and you draw the line yourself, and you adjust it, and you see kind of what works for you, what makes the most sense, and then you just pull that line out, and that's your trend line for the trade. But the important part with channels is then you create a parallel line and you push that up. So you can see, ignore the middle line for now. Some people like to do that, but take this lower line, and if you just moved it up, then you have the upper line. Make sense?
I think so.
So you can see how someone could have traded this where they buy on a touch and then close when it gets to the upper line, buy when it gets to the lower, and close when it gets to the upper, and so on. And then when it breaks, you bought here. Some people will buy on the first green candle, or they'll wait for it to touch the line and then start to bounce off it and then buy it, or whatever.
You're probably doing a lot, it's like a lot more action doing it this way, right? It looks
is.
like?
Yeah.
Okay.
Yeah, because you could see how someone could have bought at point 2, and if they had held until the channel broke,
right, they're waiting.
They're still...
Yeah.
But, they still made a bunch of money. But the guy, if you executed this perfectly, you would have made more. Again, it's going to be up to you. And then again, some people don't like to trade within the channel at all. They only trade
outside the channel,
on the exit of the channel. So what you would do is you would, as this line is going, you would, the way I showed you in Trade Ideas, where you could put out your order and have it waiting there, you would just adjust it a little bit below the line, and you can see how quickly the profits came from that. So again, here's just another example in Bitcoin, but really, again, these are all, it works on any market, where you could either have traded this line, you could have connected point 1 and point 2, and then shorted at point 3 and closed down here, or you could have just waited and said, as soon as it breaks over this trend line, that's where I'm going to participate. And then people will either put their stop below the channel, or they'll put their stop right inside the channel and say, if it gets out of the channel and then comes back in, I'll get out and I'll get back in if it gets back out of the channel again. And you can see what a pretty massive return this could be. Generally, what people will do is they will target the start of the channel when it comes to price. So you would have bought right around here where it broke. you'd put your stop really close right here. And then your target would be where the channel started, way up here. So you can see how little you're risking versus how huge a potential gain it is.
Yep.
So if you're right 25% of the time with this, it's a good basic strategy. So now next time, these are all the other technical patterns we're going to start looking at. But you can see they all come from the same type of action, looking at the highs and the lows of the chart. Right now, again, everything we've done has said, okay, a trend line is like this, and it just goes up. And we always talk about higher highs and higher lows. But you can see how in some of these there are equal highs and higher lows, or there are lower highs and lower lows, right? Sometimes the price is contracting, and sometimes it's diverging, and sometimes, right, there's a high that it can't break through, like this one on the bottom right, but there's higher lows, right? And all of these things mean different things, and they all have built-in risk reward parameters. There's been mathematical studies on them showing where you should target, what's the probability they're going to work, all of these things. And this is a lot of what I study when it comes to, building algorithms and that type of thing, is these and how to express a lot of trigonometry, which you'll be very excited
right up my alley.
About. All right, so there we are, a little bit of a lighter one as we kind of dip our feet back into technical analysis. Again, the next few will be these patterns. Then we're going to go into some fundamental and some statistical stuff as well, which you'll love. I know you love that little intro to stats that we did.
I love statistical anything. Right, yeah. My jam.
But yeah, that's it for this episode. Again, if you've got any questions, or if there's anything as we go on, I have kind of a set curriculum, but to the people at home, if there's anything that you want us to cover, go ahead. If there's changes you want to the format or whatever, just let us know. So any questions from you? Channel trading makes sense?
Well, yes.
You're going to go on the sim and find a channel and make a bunch of fake
trades?
Make a bunch of fake money for us?
I lost my first trade. I'm so upset.
Well, it's all about what the next one is. There'll be some stuff, and this just, I guess, while we're shooting the shit, that little tease. Trade Ideas is going to have some trading challenges coming up. So I don't think I'm allowed to be in there, but I'm going to put Jess in there just to see how she does against the pros. No questions? No? Okay. Bye, guys.